Right, recording and transcribing. Let's rock and roll. Hey, hello everybody. One more time, here we are, Andy and your good friend over here, Tony Alvarez. Gonna be talking about real estate, about loan, mortgages, and anything and everything that has to do with real estate. And probably want to throw a little bit of some other stuff over there into the conversation. Andy, how well are you doing today?
I am very well. How about yourself, Tony?
I'm doing fantastic, enjoying this beautiful weather.
Yeah.
Pretty sure you didn't want to come back. Last week you were out of town, huh?
Yeah, it was tough to pack up and come home. But what's interesting to me is, we were 4 hours or so south of Birmingham, and the temperatures for pretty much the entire week that we were gone were warmer here than they were there. And so, but still, the weather was beautiful. I think it rained. It rained 2 nights and did not rain at all during the day while we were there, and just sunny, beautiful days. The wind blew a little bit, it's blowing pretty hard a few days, but hey man, it was, when you wake up in the morning and you look out of the window off the balcony and there's the beach and the ocean, it's a pretty darn good day.
Oh yeah, that's a great day. Most definitely, I agree with you on that one. Any quick question before we get into all the topics and everything. Uh, the the Federal Reserve, they met
Yeah.
last week, and it wasn't what everybody was speculating and waiting to happen.
It wasn't, but buried deep in their announcement, I guess, of what they were going to do with rates, the Fed is lowering mortgage rates without lowering interest rates. So you and I have talked about this a couple of times on here, and that is how the Federal Reserve does not directly control or affect mortgage rates, that they're determined by the market. However, you think about it, and the federal government, they're a big fish, a very big fish, probably the biggest fish in a big pond. And they have a lot of money to throw around. So what they did this past week was they announced that they were going to basically slow down on the selling of government-backed bonds. And by doing so, that means that, I'm sorry, I said buying. They're going to slow down on the selling of government-backed bonds. And by doing so, that means that if they're not selling as many, they're going to be buying more.
Correct.
And when they're buying more, that means we have another very big player in the market. And mortgage rates are affected by supply and demand, just like everything else in our market. The more demand there is, or the less supply, or a combination of both, the higher the prices get. And so when the Federal Reserve says we're not going to sell as many bonds, that means we're going to buy more bonds. And by buying more bonds, that means there's going to be another big player in the market, in the bond market, buying up those bonds, which in turn is going to make mortgage rates come down. And so the market did like that news. Now, let's fast forward just a little bit, and then we're going to jump into the topic for the week for me and you. But let's fast forward a little bit. Today, the bond market is actually selling off a good bit. The reason it's selling off is because there's a pretty decent stock market rally. So for the past several weeks, as the stock market has come down in value, the money has come out of the stock market and gone into buying bonds. And because the people have been buying bonds, that's caused rates to come down. So now we're seeing the opposite. We're seeing people sell those bonds, buy stocks. We're seeing the stocks go up, and we're seeing the mortgage rates go up a little bit in tandem with that. So interesting things going on in the market. Ultimately, the Federal Reserve will win out.
Yeah.
They will buy enough bonds so that it does drive down mortgage rates, while at the same time they're going to keep that Federal Reserve rate the same, meaning that interest rates on things like credit cards, car loans, student loans, any kind of consolidation loan like that or installment loan like that is going to, the rates on those are going to stay the same, but the mortgage rates are going to come down. And that's one thing that the government wants to do, is kind of spur along the housing market. And that's one very, very bright way of doing it, to cause these mortgage rates to come down and get the housing market to speed up a little bit. So,
Yeah, I see in that. I can see that. So personally, I think the way I see it is good news.
yes.
It's fantastic news. I think we're going to the right direction, because actually what's going on, and if you want to see the other point of view, is real quick, is they are protecting the consumer.
Yes.
And I think the consumer is getting protected right now. They're not promising anything. They're not giving false confidence to people to go and go into a spending spree when it comes to buying cars, lending money to the bank to do whatever it is. And that, of course, eventually will more or less impact people's ability to apply for a loan, to get a mortgage approval. So
That's
I think
right.
it's great things.
Yes.
You know.
Yes. Totally agree.
The other
So,
week, a couple of weeks ago, we talked about one of the listings. We sold it. I sold it that I had, that they did not do an appraisal. They
yeah,
did property data. I forgot the name.
property data report. Yeah.
That that's what it is.
Yeah.
Property data report. It was very interested. I was something that was totally new for me. I was a little bit aggravated, but I did a little bit more research. Talked to some other people. After talking to you, you kind of like calm me down a little bit on that subject. It
Good.
made me more curious about it.
Good. I'm glad I could talk you down a little bit. You know, it's one of those things. I believe it's where the industry's headed, like it or not.
Yeah.
But yeah,
And that's something I think is going to be a topic that we're going to have to talk to an appraiser about it.
yeah,
You know, what they think about all that, what's their point of view, and if they foreseen any problem, or they foreseen any slowdown into the appraisal war for the
yeah,
appraisal.
yeah. I've got an appraiser friend that I know would be glad to join us on a video.
No, definitely. Well,
Can we
let's
do
try
that?
to set it up.
Yeah.
You
Okay.
know. With that said, you had a question for me, didn't you?
I
I know.
do. Yeah. So my question is this. Let's say I'm selling a property
Mhm.
and I call you and I say, "Hey, Tony, I'd like for you to come and list my home." And I've got kind of in mind a price of what I'm wanting to get for it. But of course, you're the professional. I'm going to take your advice. I'm going to take your guidance on this, but I'd like for you to come look at my house and give me an idea of what you think my home is worth and what you think it may sell for in this market. So from there, how do you determine what you think my house may sell for, what my market price for my house may be?
That's a great question, actually, and I'm glad that we're going to talk a little bit about that. It's pretty simple. Let me start with saying that the price, the listing price, the asking price is set up by the seller,
Okay.
not something that we, the realtors, ultimately decide. At least in my case, this is what I do. You call me and I'll go and I'm going to show you what we call a CMA, a comparable market analysis of the properties that look like yours, compare apples with apples, no apples with bananas, apple
Hmm.
with apples. We look for properties like yours, 3 bedrooms, 2 bathrooms, square footage to be, close, because there is not a home that is equal to another one, even if they're brand new homes, the same builder and everything. Believe it or not, they're not the same. There is
Yeah.
always a small little difference in all the houses. So what we do, we look for properties that look alike, that got similar things to compare with, that were sold. In my case, what I do, I look for the past 3 months,
Okay.
and I do a half a mile radius or a mile radius, depends where the property is located. Then when I'll find those properties, the ones that have been sold for the last 3 months, and if I don't find anything in the last 3 months, I go back to 6 months,
Hmm.
right, within that radius. So to make it easy, within a mile radius, 3 months ago, and I'll find 4 properties. And all of a sudden, two of those properties, they were fixed uppers. So instead of being worth at $100,000, they're worth at $40,000, and that's what they bought it for. So can I use that as a comparable with the property that is, uh, when we just see it, there's really nothing major to do? That's the $1 million question there. Usually I
Yeah.
do, because I want to see, I want to compare mostly for square footage, you know. And I look for properties that looks like yours, and I look at the pictures and I create that report and put them all together. And based on that information of what was sold, plus what is active, meaning what is being for sale, not on the contract yet, but it's being for sale right now within the same parameters, one
Mm.
radio and how long it's been on the market and what they asking for. Based on that, I suggest a range of the price that you should sell the property for. We find a property that is 1,500 square footage, 3 bedrooms, 2 bath. Yours is 1,400 square footage, 3 bedrooms, 2 bath. So there is 100 square footage difference. So what will
Hmm.
be the difference on price? How soon you want to sell the property? Because this one that is for sale has been sitting there for 3 months. So why is been sitting there for 3 months? Picture looks fine. So it's overpriced, or like everybody always think, what's wrong with the property?
Right. Yeah.
That's the first thing. Probably is nothing wrong. It's simple that it's just priced too high. So you really, like I say, how soon you want to sell? What is your goal on selling that property? You don't want to put the same price than this one, but also you don't want to underprice it too much or overprice it. So we
Mm.
find the middle number in between that, so that way we can price that. And that is when we use the compare sales. Professional appraisers, certified appraisers, they use those, they compare whatever has been sold, but also some of them can use what is the replacement cost. How will cost to replace a property in case burned out, in case of a hurricane, in case of anything happened to the dwelling, to the
Hmm.
house itself. How much will cost to replace it? So that can be used also to appraise and to put a price on a property. But that is more detailed work that certified appraisers use. So in short, we real estate agents, at least in my case, I use the comparable analysis. I look for the properties that look alike, the most close look alike to yours, how much they were sold, how long they were sold. I'm not going to use a property that, let's say, next door neighbor in that house was sold 2 years ago. We know that it's not going to be the same,
Right.
you know. And in short, that's how we decide the range of the value and we present it to you, the seller, and you decide what's the price you want to use.
Yeah. Okay. So ultimately, then it's the seller's decision
That is correct.
on what to price that property. Now, if let's say you come to me and you say, hey, the comparables say your home is worth 300,000 and there's 3 houses in your neighborhood that are comparable in size, comparable in the number of bedrooms, a lot size is comparable, comparable in age, and they all sold between 295 and 300. I think that 300 is a good value for your home. And I tell you, Tony, I want to list my house for 350. It's bigger than those 3 houses. It's what ultimately I'm not going to tell you is it means more to me than those other 3 houses.
Correct.
So I come to you and I say, I really want to list it for 350. At that point, not only what would you do, but what do most agents do? I mean, do some agents say, I think you're out of range on this and you're being unreasonable, and because of that, this house is going to sit on the market for a while and I don't want my name on it while it sits on the market overpriced? Or, are there agents out there that are going to say, uh, all right, let's put it on the market for 350 and see what happens?
Yeah, it's that's a great question. A good real estate agent, a good realtor, a person who really cares and values their customers will definitely talk to you and try to get you into your sense that 350 is not reasonable. It's not happening. The numbers don't lie, the data don't lie, and the market dictate that's the price. 300 tops, 35 tops if you want to.
Mm-hmm.
And that's what a good real estate agent will do. And ultimately, if you're thinking, no, I want 350, 350, at least in my case, I will shake your hand and I will say, thank you for the opportunity because I don't want that happen. And I done it. There was a house in Alabaster actually that the owner wanted 390, and the comparables, the house was valued around 310, 315.
Oh, wow.
And he was just 390, 390. Everything is new. I changed this, I changed that. When you put that sentimental value into something, when you think that because you put a new countertop, it's going to give you triple the value instead of probably another extra 3 or 5 grand,
Mm-hmm.
uh, you're not thinking well. So as a good agent, you have to. I declined that listing. I actually told him, thank you very much. That's not the price that is going to sell. And I personally don't want to put my name on something that is going to be sitting in the market for too long just because I want to make a sale and I don't want to lose it.
Right. Yeah.
I think my reputation is very important in that case. Long story short, that house stayed on the market for 10 months, have 2 reductions, and at the end of 10 months, it got sold for 315, the price that I told him 10 months before.
Yeah. Yeah.
So I always try to do that. And most of the good agents, great agents, will do the same. Listen, numbers don't lie. This is what's going on. I know you have done some upgrade to your properties and everything. And that's another problem that a lot of people run into. You need to know what type of materials you want to use, how much you want to spend renovating the property and making it ready for sale. Depends on the neighborhood that you live at. You're not
Mm-hmm.
going to put, let's say, a chandelier in a house, a chandelier that costs you $3,000 in a house where the houses in that neighborhood are selling for $150,000.
Right.
You're not going to recoup that money, no matter how beautiful it looks. I have another one in Center Point right now. It used to be a duplex. They're making one house. It's 4 bedrooms, 2.5 bathrooms, beautiful home. Everything inside is brand new. Every wall, wires, everything, gorgeous. But unfortunately, the guy wants to sell it for whatever new construction square footage it is. I forgot the number right now, but end up being $297. In that neighborhood, the
Wow.
most expensive house that's being sold in that particular neighborhood is 210.
Yeah.
And on the same street, there is one house right now that is being completely remodeled as well. And I know because I went and see it a couple days ago, and it's going to be put on the market for 125.
Wow.
So, that's another listing that I decide not to take.
Yeah.
And at the end of the day, I'm pretty sure, they're pretty much upset with me because I didn't want to help them, but it's just not reasonable.
Yeah.
Just because of thinking some agents will take the listing, will list it at the price, thinking in 2, 3 months I can convince them to, bring the price down and everything. But in 3 months, you already lost that opportunity. In
Yeah.
today's market, the way I see it and the way it's working right now, if you don't get an offer within the first 37, 38 days, you need to figure out your price strategy
Yeah.
or the marketing that you're doing on the house too, because sometimes some agent just put them on the MLS hoping that another agent bring a client and they don't market the property well.
Yeah. Yeah.
And that's what I do, Andy, basically. I don't have a problem saying no to listings. Same when a buyer, we go and see a house, and just because the house is within the price range, it doesn't mean that's what we need to offer. I have one right now. It's a Medicaid, and my buyer's paying cash for it. The house they're asking 160, which is the assessment from tax record. Medicaid
Hmm.
usually that's what they use. So it's 160. We offer 140. I just got an email today from the listing agent asking me if I have pictures or a contractor estimate or something saying that we need to do these repairs and all these problems are with the house. That's why we offering 140. Other than that, they're still going to stick to the 160.
Yeah.
So I need to find me a contractor now to go and do the inspection in the house, although we're not under contract, but my buyer wants the house. So he is willing to pay, the inspection report so they can have something to base. We can have something that to base our price that we offer.
Right. Yeah. Yeah. It's interesting to me that these homes can come on the market, be overpriced, and it because I'm in the industry, I see this side of it. For a seller, even in the example of what you talked about, the home in Alabaster, 297. No, I'm sorry, that was one where the gentleman said
Yeah,
380 or 390 is what he needed to sell it for, and it ended up selling for 315.
315.
Yeah. Even if that seller had a buyer who was willing to pay 390, that home still has to appraise for it.
All right.
And the appraisers are going to use the same data that you use to come up with your competitive market analysis, with your CMA value. And so, I it's just, it's interesting to me because I do know what goes on behind the scenes, and a buyer would not be able to buy that property for 390 unless they were paying cash because the home would not appraise for enough money.
Yeah. Or they waive the appraisal contingency.
Yes, which means they would have to come out of pocket
Yeah.
the difference between 390, the sales price, and what the appraisal is. They'd have to come up with that plus their down payment
And
in
that's what I
cash.
tell people, I don't want to, don't take it the wrong way, but you wouldn't pay uh, a Ferrari price when you're going to buy a Toyota Corolla.
Yeah.
It just doesn't make sense. Same with the house. I mean, I don't care how much you like the house, unless you're planning to live there for 30 years, then, go ahead, do whatever you want, but you're not going to recover those $40,000, $50,000 extra that you put in out of your pocket anytime soon. It's not going to
Yeah.
happen.
Yeah. Yeah.
And that's the examples I used about that. Well, Andy, that's all I got. What else you got today?
That's it. I think this is good. Give a little market update on rates, and then do a quick touch point on real estate and your approach and suggesting to a seller what they should sell their home for. I think a lot of good information in this video.
Most definitely. Well, Andy, if people wants to apply for a mortgage and get a better picture and a clear picture for how much they qualify, or if they qualify, or what they can do to qualify, how can they reach you?
Yeah, so I can be reached at 205-979-4412. I'm at extension 1, and I'm happy to help out in any way, answer any questions, and so on and so forth. Like I say, it seems like every single week, telephone call's free, so call and pick my brain. It won't take long to pick it, but call and pick my brain. I'm happy to help in any way. How about for you, Tony? How can they contact you if they want to list their home?
Well, you guys want to list your homes or need some help finding a property after you get qualified by Andy, just give me a call, 205-370-3248, and I'll be more than happy to help you guys to achieve your real estate goals, either selling or buying. So, Andy, once again, thank you for being with us this week, and I'll see you next week, my friend.
Sounds great. Thank you, Tony. Have a good week.
You too. Take care.
All right. Goodbye.